Hi everyone. Am I audible properly? Gautam sir?
Yes, you're good.
Yeah. Okay. Hi everyone. A very good evening to all of you. This is Monisha. It's my pleasure to be your moderator for today's webinar. I welcome you all to the Startup CA Conclave Series, Session 1. So this is a collaborative effort between the Institute of Chartered Accountants of India, Mangalore branch, Shine Foundation and Emirise Foundation. So today's session on the beginner's guide for startup registration, we'll be diving deep into the different legal structures available for startups such as LLP, LLC, sole proprietorship, private limited, and public companies. By the end of this session, you will be equipped with the knowledge to choose the best structure for your specific ventures. So now, let's welcome our esteemed speaker for today, Mr. Pavan Sharma. Mr. Pavan is the founder at BCL India and an All India Rank 3 holder for CA Final. He brings a wealth of experience to the table, specializing in developing strategies for foreign companies entering the Indian market and guiding startups in building compliant and successful businesses. He also conducts workshops and speaks at numerous forums across the country. A warm welcome to you, Mr. Pavan.
Thank you so much, Monisha.
Yeah, so we all know that incredible value of CAs bring to the table for companies of all sizes. They are the backbone of financial guidance. Without the expertise of CAs, a startup's journey can be fraught with challenges. So their guidance on financial strategies is essential for a startup success. Building a strong startup requires a solid foundation. So, and for CAs play a vital role in laying that foundation for startups. So we are thrilled to have prominent members from Institute of Chartered Accountants of India with us today. So CA Prashant Pai, Vice Chairman at Institute of Chartered Accountants of India. Welcome you, sir. CA Daniel, yeah, okay, sir. CA Daniel Pereira, Secretary, CA Mamata Rao, Treasurer, CA Gautam Nayak, Past Chairman, and CA Prasanna Shanai, Past Chairman. A warm welcome to all of you. We all want to extend a warm welcome to our esteemed partners who are instrumental in engaging startups and students. So Hitaishi B, Incubation Manager from Shine Foundation. I welcome you, Hitaishi. Dr. Geeta Kiran A, Founder and CEO from Emirise Foundation. I welcome you, ma'am. And all the participants who have joined us with this for this webinar, I welcome you all. This Startup CA Conclave initiative, we are excited to bring you a total of 12 insightful webinars followed by a culminating conclave event. So over the next few weeks, we'll be exploring a variety of topics crucial for startup success, from legal structures and fundraising to financial management and market studies. So throughout the webinar, I encourage all the participants from our audience, please feel to ask the questions in the chat box and unmute yourself during the Q&A section at the end. So, and without further ado, let's get started. The floor is yours, Pavan.
Before Pavan starts, I'll just take a moment here, Monisha.
Yeah. Okay, sir. Yeah.
I'll just give a backdrop or an overview as to why and how this entire thought process culminated. Actually, we are here on 31st May, but the whole thought process was as a discussion when I'd been to one of the colleges. I interacted with one Mr. Johnson Tellis, who is a part of I guess Shine and Inunity. So when we discussed, we wanted to do something for the startup ecosystem. And it was then that when there was a startup in and around Mangalore, we felt let us have some kind of a series wherein value addition in terms of finance, and as you rightly said, in terms of we all are in this era of Shark Tank where we see funding, capital raising and all those things. So we all have heard it, but basically whenever we speak of startup, genuine questions arises in terms of those who are just wanting to get into this. How do I cope up? How do I start it? What is it that I need to do? Can I do it? and all lot of other questions. So considering this, we felt we will have it in a phase-wise manner, wherein we'll invite experts. Now, as you rightly said, Pavan is a class apart, is a expert in a lot of things, and the startup is one of the domains, and that is why when we spoke, we felt Pavan was the right person, and immediately when I contacted him, he was more than happy to come here, contribute whatever knowledge he has, and be a handholder, be a guide, be a a friend in this entire whole concept of startups. So here we are today. The whole process, today's session is basically being the first session is as such as to kind of a startup, whether a single person proprietorship or two people being a partnership or a private limited. A lot of doubts. Can I do a private limited? Can I be a partnership? What about LLP? What about this, that? Considering all those things, to give a clear perspective as to what is what and how can one differentiate one from the other. This we have started this session, that is the beginner's guide for today. And as Monisha rightly said, feel free. This is an interactive session. As and when Pavan interacts, is the perfect person. He has a lot of experience in this field. Through him, a lot of startups have blossomed, and today they are success stories. So make the best use of his wisdom, make the best use of his expertise. Ask as many doubts you have, and I'm very clarify all your doubts. So let us have an engaging session. And Pavan, majority of them are those who are into the startup field. So I feel their outlook will be as such exactly as to how they need to go about the startup, though they may be in a startup or they may have their own plans. So considering all of this, our main intention is to make sure give them that fallback that it is possible, and these are the ways that one has to go forward. So with this, I also thank all the other partners who have joined us: Shine Foundation, In Unity, Memorize Foundation, Geeta Madam who is here. So thank you everyone for joining hands, and let us make this a collaborative effort, indeed fruitful, and the purpose for which we have initiated it meets the end to the knowledge exchange session. So with this, I extend a warm welcome to Pavan once again on behalf of the Mangalore branch. He's a renowned speaker. Usually he engages. Just a minute. So with this, sorry for the inconvenience. Pavan is a renowned speaker, not just for this field. He engages peers as well as experts in various fields. So I welcome him once again on behalf of the Institute of Chartered Accountants of India. He's a member of our own fraternity, a dear friend, and more than that, the perfect person for all of you for today and going forward. With this, Pavan, the session is all yours. I'm certain your insights, your handholding will serve a great purpose, and the whole initiative will be fruitful. And the first step is today. Over to you, Pavan.
Sure. Thanks so much, Gautam. And also thank you so much, Monisha. At the outset, I'd like to thank everybody who's involved in this program, and it's a great initiative. Thank you for making me part of this. Thank you for also giving me the opportunity to speak at the first session. Please convey my regards to all my friends in the ICI Mangalore committee. They must be sitting close by, so please convey my wishes to them. So the idea of the session, Gautam and I had this conversation a few weeks back. The idea was, how do we give the audience a basic understanding of the startup world, right? And give them enough tools so that they are able to decide their next steps. What I understand is that some of the people in the audience are planning to create their own companies. Some of them already have their own entities. So the idea is to establish a foundation. What I understand from Monisha is that will be this is a 12-part series, right? So I think over the course of these lectures, we can increase the depth and complexity for the benefit of the audience. So think of today as the foundation, and I'm hopeful that this would be an interactive session, and there'll be a lot of questions, a lot of thoughts that we would share with each other. And let's begin. So what I've done is I've broken down the conversation into three main heads. The first one is the regulatory landscape, where I would like to inform you the various types of entities that you can establish yourselves as. How do you do business in India once you've set up your company? How do private limited companies work, and the Startup India recognition by itself, right? So this is the first piece. We'll be spending some time on this heading, right? Startups regulatory landscape. The second piece is, how do you make progress from the entity stage? Now, what I've done in this space is we have a scorecard that we have developed within BCL India. I will share that with you. Some of the terms or some of the topics in that scorecard may be for slightly mature startups, but it will give you an idea as to what we look at when we value companies, or from a point of view of an entrepreneur, what are the certain things that you would come across in your startup journey. I've run a startup myself a year and a half ago. I understand firsthand how difficult the journey is, and help from all quarters, would be welcome. So think of the second piece as me sharing my learnings from my 1.5 to 2 years of startup journey. The third piece is your questions. There are certain questions that I've received on WhatsApp. I have tried to cover some of these questions in the course of the presentation. Of course, if there are any questions that I've left out, we'll address them specifically at the end of the segment. So Monisha, what I would like to do is, instead of taking all the questions at the end, I'm happy to take questions, as and when I'm explaining, right? So the audience keep typing questions.
Are you okay with unmuting themselves and asking, or just dropping the questions in the chat?
Type the messages to the chat bot, right?
Yeah, I think they have already started.
Yeah, fantastic, right? So I'll pick them up and I'll start answering them. That way at least it is more relevant. Okay. Okay, so let's begin. The first thing that I'd like to share with you is the regulatory landscape. And startups are popularly structured as private limited companies. There are two entities, private limited companies and limited liability partnerships. I will cover limited liability partnerships immediately after this slide. But these are two popular business structures. The third one, one of them messaged me, is a partnership firm a good structure to do business in? And it is not, and I'll tell you why. So the private limited company and the limited liability partnership, the common word between these two is limited, right? And the idea of limited is limitation of liability. The whole concept of these limited companies or limited structures, when it was envisaged, and it's almost 200 years since the time these structures have been popular across the world, is how do you split your liabilities, and how do you split your business liability from your personal assets, right? No entrepreneur or no businessman would want the personal assets to be affected. And say, given that she would have worked very hard to create this asset base, you would not want a situation where those assets are at risk. So a limited liability structure will help protect this asset base, your personal asset base. So a private limited company and a limited liability partnership give you that advantage where you can limit the liability to those that are created in the entity, which means, let us take an example where the company engages a particular vendor to perform certain services. Or let's take a simpler example, right? Let's take the example of a company having taken a loan from a bank, and for whatsoever reason the company is unable to repay the loan. In the case of an unlimited structure, which is a partnership firm, the bank will have the right to attach the personal assets of the promoters, which is the entrepreneur, the business owners. In the case of a limited liability structure, the bank can only go after assets that are held by the company. Now, this is a very simple example. Of course, you have personal guarantees, personal indemnities. We won't get into that. But the fact is that you can limit your liability to the assets that are within this entity. Now, in the case of a private limited company, when you incorporate a private limited company, you will get a certificate of incorporation, the image that you see on your right. And that is the company that we had established some years ago. There's a name change, but this is how a certificate of incorporation would look. Now, in the case of a private limited company, you can have close to 200 members or 200 shareholders. And when we say shareholders, these are owners of the company. Every shareholder is a part owner of the company. A share is a unit of capital. It is your participation in the ownership of the company. Private limited companies are the most preferred route to establish businesses and establish startups primarily. It is also a preferred route because investors, regulators, the government understands how private limited companies work. The private limited company regulation has been in India from 1956. It was amended in 2013 and a new act was introduced. So it is a structure that people are very familiar with and are comfortable to do business in. And if you look at the incorporation process, all of that is done on MCA's website, the Ministry of Corporate Affairs. There are forms that you need to file. I'll not get into the details of the forms, but the process has been simplified greatly over the last few years. And it takes between 2 to 4 weeks to establish a private limited company. It starts with you giving a unique name. Now, again, this is something that's interesting to know, that you need to have a unique name to run a company, but the name of your company can be very different from your brand name. So I can have XYZ Technologies Private Limited as the name of the company. The brand name could be ABC. It doesn't matter. Of course, you'll have to protect your brand. I have covered that in a subsequent slide. We look at it. A private limited company needs a minimum of 2 shareholders and minimum of 2 directors. One of the directors should be a resident of India. A resident basically is a person who's in India for more than 182 days. The reason why you also need a resident director is so that the government has a point of contact in India. You don't have a situation where you have fly-by-night operators and the company disappears, right? So you need a person in India who the regulators can reach out to. There are 2 other structures, which is a 1% company and a small company. 1% company, as the name suggests, it can be set up by one individual. It is an alternative to proprietorships. Small company is a structure where the turnover and the capital is below a certain threshold that's presented below. We'll cover that subsequently, and the government has given certain relaxations. In the case of startups, they are eligible for certain tax benefits as well, and that's the 4th piece. We will cover that when we look at the tax rates that we're dealing with. Now, as far as startups are concerned, or early stage startups are concerned, small companies, which are companies which have a turnover of less than 40 crore, paid up capital of less than 4 crore, there are certain benefits that these companies get. The compliance is much lower than a regular private limited company. So a small company can have just 2 board meetings. Otherwise, you need to have 4 board meetings, 1 every quarter. Board meeting is where you have the board of directors, who are the managers of the company. They get together. Managers are the ones who take decisions. In the case of a private limited company and an LLP too, there's a segregation of responsibilities. So the board of directors run the company, the day-to-day affairs, but the owners, they are the shareholders, they can continue to live their life as usual. It's similar to how you buy shares of listed companies. You are not involved in the day-to-day operations of the company. There's a board that is taking care of how the company is functioning. But you as an owner will get to participate in the economic benefits, the profits that the company makes. Come back to small companies. There are 2 other benefits. The company did not present a cash flow statement. I have covered what a cash flow statement is briefly. And its annual returns, which need to be filed by all companies, can be filed through a self-certification. You don't need a company secretary or a CA to sign this off. So private limited companies, again, the go-to structure for startups. Preferred over any other structure because investors understand this much better. As far as you are concerned, the audience, if you are planning to establish a business, if you're planning to give structure to your ideas, the private limited company route is the preferred route. Again, the Mangalore branch of ICI would be a very good place to go to and discuss the mechanics of setting up a company, the forms, the timelines, procedures, the documentation. I'm sure you'll get a lot of help from the Mangalore branch. But if you wish to give form or shape to your business, do consider private limited company. The second piece is the limited liability partnership. Again, it's gaining a lot of popularity compared to private limited companies. There is no limitation on the maximum number of partners that you may have. Partners are similar to owners. Private limited company, like I mentioned, had 200. LLP, there's no maximum. You can have any number. Incorporation is fairly straightforward. There's an LLP deed that needs to be signed. Takes between 2 to 3 weeks to set up a LLP. Again, you need a minimum of 2 partners. And there is a segregation of ownership and management. Ownership is the general partners and management is designated partners. Companies can also become partners of LLPs. So for example, you may have investors who run their funds as companies or Section 8 entities or trusts. Now these entities, being artificial persons, can become partners of an LLP. The cost of compliance of an LLP is much lower compared to a private limited company. There is, of course, a difference in the tax rate. LLPs end up paying slightly higher tax. We'll come to that when we discuss the tax portions. Now, As far as partnership firms are concerned, and this is a specific question that I've received, why we do not prefer partnership firms is because of the unlimited liability, the risks that the promoters run. Their assets, their personal assets are at stake. So partnership firms are definitely not preferable. However, Startup India recognizes partnership firms as well. So a startup could be structured as a partnership firm and still get recognition under Startup India, but it does not get tax benefits. Right? Again, not preferable because in case your business does not go as planned, then the investor will have the right to go after your personal assets. So please do not think of partnership firms. Either think of LLPs, or even better would be private limited companies. There's another question that I received is about conversion. LLPs and partnership and private limited companies can be converted to each other structures, meaning an LLP can be converted to a private limited company. A private limited company can be converted to an LLP. Again, there's a set of documentation. There are certain procedural matters. You need to file public advertisements, forms with the ROC. But even if you wish to start your journey as a limited liability partnership with lower compliances, with a more flexible structure, you can certainly do that. And then in the future, convert your business into a private limited company. Typically, it takes anywhere between 2 to 4 months to convert a LLP to a private limited company. So whenever you believe the time is right, you can always convert your entity into a private limited company. Similarly, you can also convert a partnership firm to an LLP. The LLP Act has a specific schedule that deals with this. But again, I would not advise you to set up a partnership firm. The last point that I want to mention as far as difference between LLP and partnership firm is the ownership structure. In a private limited company, you can define ownership with a lot of clarity because you have different kinds of instruments that you can issue. I have covered that in the next slide. I will discuss that. But in the case of an LLP, the ownership structure cannot be as clear as a private limited company. You do not get a lot of flexibility. It is just capital account. So if you're going to get money from investors, it may be slightly harder for you to be creative in a limited liability partnership, but private limited companies give you a lot of flexibility to issue different kinds of instruments, protect yourself, protect your company, and not give away a lot of ownership in the early days. Okay. So let me quickly take some questions. Okay, so
Yes, Pavan, do you wish to?
I'll go through it. I want to following. After what income should I register?
Hitaishi, you can start from Hitaishi. From there, it's the question starts.
Okay, where is Hitaishi?
It's at 1716.
Yeah, but there's a question on top by Atisha Banerjee.
Yeah, I've sent once again the same question.
Okay, so let's start with Hitaishi. Where can I find these details in detail if I want to know? So you can look at a website called mca.gov.in. I've put it here in the chat. So sometimes this website works, sometimes it does not work, but you'll be able to get enough information. Again, I would urge you that you go and visit the Mangalore branch of ICI in case or you have any questions, because it may be overwhelming. And there'll be a lot of information that will be thrown at you. So if you're in doubt, please go and meet some of these experts, right? The next question is Johnson. What is the importance of paid up capital while registering? How does it affect the share value and number of shares? Now, you have two kinds of capital. The first one is the authorized share capital, and the second is the paid up share capital. The authorized share capital is the maximum amount of capital that a company can raise at any point in time. Think of it as a license, that you are allowed to raise capital to this amount, X amount. Capital is represented as number of shares multiplied by the face value of shares. So, for example, 10,000 equity shares of face value or nominal value rupees 10. So that is 1 lakh rupees of authorized share capital. Your paid up capital can be any number lower than this. So you can start a company with even 1 rupee paid up capital or 10 rupee paid up capital. Of course, you need 2 shareholders. So in my example, you'll have 2 shares, which will be 20 rupees. Now, as far as the share value is concerned, India does not have the concept of fractional ownership. So your shares should be at least 1 rupee or more. Outside of India, you also have concepts of fractional ownerships or decimal share price. So you can have $0.01 share, right, or a few cents. So the way it affects the share value number of shares, it's completely your decision as to what the number of shares should be or what the face value should be. Of course, it has an impact on the stamp duty that you'll end up paying, because you need to pay a stamp duty to the government when you are establishing this company. The authorized share capital of up to 15 lakh, the stamp duty remains the same. So whether your authorized capital is 1 lakh or 15 lakh, you'll end up paying the same amount of stamp duty. Once the authorized share capital goes beyond 15 lakh, you'll end up paying stamp duty as a percentage of the authorized capital. So keep that in mind when you want to establish the capital base. Okay, Monisha, after what income limit should I register a business entity? I am a consultant. Which income tax return will be applicable for me? Now, register. If you are a consultant, you will need a GST registration to start with. I'll cover that in the next slide. There is a certain income threshold. As far as the income tax return is concerned, that's a more complex question because you have ITR 1 to 5, which you can 1 to 4, sorry, which you can pick depending on the kind of income that you earn. So I will reserve my answer as far as question number 2 is concerned, income tax return. As far as registrations are concerned, I'll take that up in the next slide. Is vesting possible in LLP? Also, did you mean partnership firm or proprietorship firm? Okay, now vesting is a very interesting concept. It's also a very complex concept. I don't think so. I'd be able to cover most of it in this conversation, but I'll give it a shot. Now, vesting is linked to the rights, economics rights that are associated with securities, basically, or ownership. And private limited company is the structure that you can think of when you think of vesting, because vesting basically means when would the owner be entitled to the economic benefit derived from the unit. For example, if I own equity shares, think of me as an employee, and vesting is common as far as ESOPs are concerned. So if I'm an employee of a company, I will not be entitled to the economic benefits unless I stay in the company for a certain number of years, let's say 3 years. Say the company has given me 90 shares, and they vest over a period of 3 years, and they vest equally, 1/3, 1/3, 1/3. So at the end of 1 year, I would be entitled to 30 shares, second 60, and third will be 90. So there is a certain gradient that you can create with respect to the ownership, and that's possible in the case of private limited companies. LLP vesting would be very hard, but you can always get into a contract. We call that a side letter or an agreement between the partners, and we can define an agreement under the contract law where the person who owns a certain percentage of capital in the LLP or profit in the LLP will have to give back that profit percentage or capital percentage in case they don't meet the vesting guidelines. Again, vesting in LLP is highly uncommon, but extremely common in the case of private limited companies. And as far as partnerships are concerned, or proprietorship firms, they both have unlimited liabilities. I would not recommend you setting up your business as a partnership or a proprietorship. Okay, super. So these are the questions. So let us continue. Okay, so the next piece is doing business and post-incorporation licenses. So in the first 2 slides, we looked at what is the business structure, how do you establish your business. In this slide, what I'm going to convey to you is what do you do after you have established your business. There are certain checkboxes that you need to tick. And this is broken down into 2 parts, actually 3, post-incorporation registrations, income tax rates that I'd like to discuss with you, again, very briefly, and protecting your assets. The first piece is post-incorporation registrations. It is not sufficient that you just establish a private limited company or you establish an LLP. You need to take certain licenses from the local government as well as the central government. And these are licenses that allow you to do business. The first one is income tax. You have something called the permanent account number and the tax deductor and collector account number, or PAN and TAN respectively. Nowadays, you've started getting these numbers with incorporation. So there's no separate application that you need to make. Along with the incorporation certificate that I had shown you, you will also get the PAN-TAN. GST is a registration that you would need to take. And GST, I think now it's quite popular and most of you would be aware of what GST is. GST is an indirect tax. We had seen in 2017 multiple indirect taxes, VAT, service tax, excise, so on and so forth, but all of that was subsumed into GST. So now you have a single indirect tax, single principal income tax, indirect tax, so to say. But GST has 3 types of rates. You have CGST, that is the central GST, state GST, and IGST, which is the integrated or interstate GST. You have varying rates, 0%, 5, 12, 18, 28. Now you have a concept of input tax credit, which means the GST that you pay on your purchases can be offset with the GST that you collect from your customers. So, and this becomes relevant from the point of view of registration. One of the questions that was asked in the previous slide was what sort of registration I should take. Now, if you're a consultant that you're providing services, you need to take a GST registration in case your turnover crosses 20 lakh rupees. This is an annual turnover. If your annual turnover crosses 20 lakh, you need to take GST registration. In case you're a trader of goods, you need to take registration once your turnover crosses 40 lakh. Now, I would recommend GST registration even if your turnovers have not crossed this threshold. And the reason has to do with input tax credit. See, if you're not registered as a GST service provider or a GST supplier, the GST that you are paying on your purchases is your cost. You can't offset it with anything, which means that your costs increase because you're ending up paying GST on all your purchases. And as individual consultants or traders, it is natural you will not absorb that cost, you'll pass it on to your customer. So it makes sense that you take registration immediately, even if your turnover is not 20 lakh or 40 lakh. The level of compliance has been simplified greatly. You have the option of filing quarterly GST returns now. So the advantage of registering is all your purchases, and these purchases for a consultant could be travel, for example, flight tickets, or business promotion costs, or for that matter, you would be taking services from another consultant. So all the GST that accumulate on your purchases can be offset. So your pricing can be far better, far more competitive if you register yourself with GST, even if your turnovers are not crossing this threshold, right? So that's more of a recommendation. We can look at your business structures and go in depth and see what is necessary. The third kind of registration is labor law registrations. And it is possible that in the early days, you may not have employees working for you and they may join you over a period of time. But as and when you start hiring them, you need to comply with labor laws. And these labor laws have been designed to protect the rights of employees, to ensure that their safety is taken care of, their working hours are taken care of, they're getting sufficient leave, and they're not being harassed, right? So as a startup, you need to take this into consideration and ensure the safety and well-being of your employees. And that is why we have these laws. So in the state of Karnataka, as soon as you set up your business, you need to register yourselves under the Karnataka Shops and Commercial Establishment Law. You need to register yourself under the Professional Tax Law. Once you have 10 employees or more, you have to take care of their state insurance under ESI. You have to take care of their gratuity under the Gratuity Act, and you have to ensure that they are taken care of. So you have to also comply with the Prevention of Sexual Harassment at Workplace guidelines. Once you have 20 or more employees, you have to take care of Provident Fund and Payment of Bonus Act. Of course, early stage companies, less than 10 employees, the only two laws that you may be looking at is the Shops and Establishment and Professional Tax. But you may want to voluntarily comply with certain laws. For example, you may voluntarily comply with the Provident Fund law or the gratuity law or the bonus law. That's completely up to you. And if you wish to benefit your employees by voluntary compliance, you're free to do so. There's no law which stops you from voluntary compliance. So these are post-incorporation registrations. After your company set up, make sure you get these licenses, file the returns that you need to in time. That way you're running a business that is regulatory or fully compliant. Now, these matters will come up when we do what we call the due diligence. A due diligence is conducted by an investor. The investor will look into your books, look into your history, make sure that there are no non-compliances, there are no pending regulatory penalties, fines, interest, or that you've missed taking certain licenses. And if there are any of these red flags, what the investor does is that they will what the investor ends up doing is that they create what we call condition precedents. Condition precedents, as the name suggests, is a condition that needs to be met before the investment comes into the company, which means that you will end up spending a lot of time and energy making sure that the compliances are in place at a very crucial juncture of your journey in the startup, right? You may need money immediately, but the investor says, unless you go and get a shops and establishment registration, I will not put in money in your business, right? So please make sure that these licenses are in place and you're filing your returns. There's a green tick on the slide. I'm guessing somebody has a question, or maybe I'll I'll just proceed. I'll complete the slide and maybe we can pick it up, later. The next piece that I'd want to cover is the income tax rates. And this is something that will be of relevance to you when you decide the structure. In the case of companies, you'll end up paying 25% on your profits. There are certain special rates for manufacturing companies. There's a place called IFSC Gift City. If you set up your business there, you get certain benefits. Also, companies that give up exemptions, you can enjoy a lower rate of tax, which is 22%. And now this tax rate is applied on the profits that the business makes. LLPs are subject to a 30% flat tax. The difference is that in the case of a company, after you have paid the income tax to the government, when you take money out of a company, the owners, basically, they receive dividend. If some of you are investing in in listed companies, you may have started receiving dividends in the last month or so. So you would pay tax on the dividend that you receive. So effectively, the income is taxed in the hands of the company and in your hands. In the case of an LLP, though, once the LLP has paid tax, there's no further tax. So you get money tax-free from the LLP. In the case of early stage startups, though, you may have a situation of losses. It's obvious that the company might not end up making profits in the first year. You may have to spend time in research, some development work. So there is a possibility of incurring losses in the first few years. So what will end up happening is that these losses can then be carried forward to subsequent years. Now, income tax law has certain guidelines as to how many years you can carry forward, what kind of loss can be carried forward, so on and so forth. Final part on this presentation is the protection of your assets. Now, in the case of startups, your biggest assets are your employees. These are people who work for you. Now, you need to make sure that you protect the interests of your company and protect their rights. And this protection comes from the employment contracts. You may enter into contracts with your vendors. Again, your contract should be such that it protects the rights of your company, interests of your company. So these contracts will have to be created. I've seen a lot of startups who start working with employees or vendors without a contract in place. It comes back to bite them later on. So I would strongly urge you that you have some contract in place. It is not very hard to develop these contracts in today's age. A simple template could help you in the long term. There are two IP or intellectual property protection laws that I would like to touch upon. One is the trademark and the second is copyright. Trademark is usually used for name. It's usually used for logo. So in case you have a brand, you can protect that brand under the trademark law. In the case of copyright, in case you have a software code, you can protect it under the copyright law. You have your websites too. Again, these are assets that are worth protecting. Again, the website is something that needs to be owned by the company. So you'll need to get an invoice in the name of the company. In case the website has been set up before the company's incorporation, which is common, I can start a website today, run it for a few months, and then decide to start a company. The website will have to eventually be transferred to the company. So the company has to own that asset. Let me pause here. I've thrown a lot of information at you and take any questions that may arise.
Hello, Pavan. Are you there?
Yes, I'm here. There's Ms. Atisha.
Yeah, question from Atisha.
Hello.
Yes, Atisha.
Yeah. So my first question that I had asked was regarding like incorporation. Since I'm a consultant, one person, what kind of incorporation would be suitable for me?
So if you're a single person and if you're a consultant, only a consultant, GST registration would be sufficient. Unless you wish to take this idea forward and you have a more robust structure. So this would be a private limited company or an LLP. But if you're an individual, even a one-person company would be an overkill because it has a lot of compliances. So you can continue to operate as an individual. If you're a consultant, just take GST registration and maybe shops and establishment. These two would be sufficient.
Okay, thank you.
Yes, Pavan, we have a question.
The next question is on Udyam and startup schemes. So I've covered that in the startup. There's a slide specifically on startup. I think that's the next slide. So I will cover that specifically there.
Okay.
Okay, so let me proceed. Okay, so now let's look at startups. And this is the third leg to the journey, right? The first one being setting up an entity, the second getting the licenses that you need to run the company. The third one now is recognition as a startup. Now, the Startup India recognition is something that has become extremely popular, and it has also become a mandate now for any investor to put money in a startup. So there are benefits that are associated with Startup India recognition. I have covered them in two parts. One is tax benefit, and there's certain other benefits too that you can take help of. But the first question is, who is a startup? Now, the way the Startup India defines, or there's an official notification in 2019 defining who a startup is. And the criteria is that one, the entity should be either a private limited company or an LLP or a partnership firm. Now, these three kinds of so these three business structures are eligible to be startups. They have to comply with certain additional conditions. One, the idea should be innovative. It should have the ability to generate enough wealth or employment, right? So either of these conditions should become satisfied. Turnover should be less than 100 crore, which would typically be the case for early stage startups. It should not have been in existence for more than 10 years. So the life should be less than 10. And it should not be formed by splitting up of an existing business. So if you have an existing business, you can't take that business, put it into a new structure and go and claim Startup India benefit, right? So it has to be a unique idea, less than 10 years of existence, and turnover should be less than 100 crore. You can go to the website startupindia.gov.in. I have put the screenshot here, and you can go to recognition and you can apply. There's the screenshot, the first piece, it says apply now. You can go ahead and apply for Startup India recognition. You'll have to fill up a form. The form is self-explanatory. There are certain documents that you'll have to upload as well. Basically, your certificate of incorporations. You'll also have to upload a presentation. You'll have to upload your deck. So that goes onto the government's website. The benefits that a startup gets, there are two categories. The first one is tax benefit. Startups are entitled to benefits under a section called 80IC. 100% of the profits that a startup earns is exempt. It can be claimed as a deduction for 3 consecutive years out of 10. Earlier, it was 3 out of 7. But in a startup's journey, 10 years journey, the startup can pick any 3 years, any 3 consecutive years, and claim the benefit under the and the profits for those 3 years would not be subject to tax. Again, the income tax law has certain conditions that the entity should be incorporated post April 16, before March 25. But of course, this year is extended every year, so they will extend this timeline. There is another condition that the startup will have to apply to an interministerial board to claim this benefit. So there's an additional certificate that you get. There are certain other benefits too. One is the participation on the schemes. There are various schemes. So again, in the screenshot, you would see the 4th tab, which is schemes and policies. So to answer the question that was raised in the previous slide, you will get a list of all the schemes that you can participate in on startupindia.gov.in. If you're an eligible startup, you can go and see there are different categories by different ministries, and you can go and apply to any one of them. There are certain rebates that you get while filing for patents. Patent is an IP protection law. 80% of the fee is waived, so that's another benefit. You can also list yourself on the government e-marketplace, which is the GEM portal. There is a criteria for prior experience, and that is waived for startups. And the final point is that in case something goes wrong or things don't go as planned, you want to shut down your company, there's an option of fast track liquidation as well. So this is as far as Startup India is concerned. I'll pause to take any questions that you have specifically on Startup India recognition. Okay, I'll proceed. Questions. Okay, so I'll quickly touch upon a private limited company and the various instruments that you can issue. Like I said, you get a lot of flexibility in the case of private limited companies. You can issue different kinds of instruments. You have equity shares, preference shares, and debentures. Debentures are like loans. You can take loans. and ESOPs. ESOPs are shares that you can give to employees. So you get a lot of flexibility in the case of private limited companies, which you don't get in the case of limited liability partnerships. Also, I've presented a small table below, and this is how the share capital or ownership changes over a period of time. It's an illustration. So you may start with 2 co-founders, you may add ESOPs, you may have investors coming on board, and you'd see phase by phase, the ownership of the co-founders keeps reducing as a percentage, which means that you own lesser and lesser of the company, and the investors who come in will start owning more and more of the company, right? So this is typically how ownership changes hands. What you also need to understand are 2 concepts: pre-money, post-money. In the startup world, you'll get to hear a lot of this, especially when you go and meet investors. Pre-money valuation and post-money valuation. Pre-money valuation basically is the value of your company today. There are different ways by which you can arrive at the value of a company, but it's the value that is ascribed to your company as on date. Post-money valuation is as simple as taking the pre-money value and adding the investment that you're raising. So for example, if you want to raise 10 lakhs of capital today and your pre-money value is 1 crore, your post-money value is 1.1 crore, as simple as that. Dilution, if you see the table below, serial number 4, 5, and 6, which is the shares that you'll end up giving to investors. Dilution basically is the ownership that the promoters give up. So dilution is calculated as the investment by post-money value. So in my example, it is 10 lakh divided by 1.1 crore, okay? Around 11%, slightly less than 9%. So if you see this image on top, that is firm pre-money, firm post-money, and the percentage, that gives you an illustration basically as to what ownership the entity will end up, the promoters will end up giving. Quickly touching upon 3 financial statements, and this is something that you should start getting well versed with. The first one is the balance sheet, profit statement, and cash flow. And this is the second part of our conversation, which is making progress. The first piece was all about the regulatory landscape. So we've covered the regulatory landscape, the recognition of the setting up of the business, licenses thereafter, Startup India recognition, and the kind of securities that a company can offer. The second piece is making progress, and here it will be good for all of you to get a basic understanding of these financial statements. You will need to start preparing them as a company. You'll have to start presenting them to your investors. Even if you're individuals, you'll have to start preparing them and submitting these as part of your IT returns, as part of your annual returns to the government. So balance sheet, PL, and cash flow. Simply put, balance sheet is a summary of assets and liabilities. The profit statement is a summary of your income and expense. Cash flow is a summary of cash in and cash out. I've put some bullet points here. I'll share the PDF anyway with you. You'll be able to go through these points, and if you have any questions, we'd be more than happy to answer. The last piece of the conversation is how do you assess companies? And this is related to some of the questions that I'd received. I want to run a startup. What are the criteria? What are the things that I need to keep in mind if I have to build a successful startup? So I've broken this down into 4 elements, which is the solution, which is your product, the management, what sort of market you'd be working in, the financial metrics. As far as the product itself is concerned, you need to create an idea that has some relevance. People are willing to pay for your services, pay for the product, and you have a moat. Moat basically is what is your uniqueness, what protects you from competitors in the market. You also may not be a dominant player. The market may have a lot of other players. You have a lot of competition. It is good that there is competition, because if there's no competition, which it may indicate that there's no market. So you can look at a line of service or business where you have enough competition and create your uniqueness within that space, and also create a uniqueness from a technology standpoint, right? That will help you for sure. As far as management is concerned, it is good that you add certain experts to your board or to your decision-making capabilities. You may have maybe board of advisors, which your universities may help you with, institutions like accelerators, incubators, or even institutions like ICI Mangalore may be helping you with. You can create this team of advisors who will serve 2 purposes. 1, guide you in your journey. Secondly, also present a much stronger team to your investors as and when you want to raise money. The other element as far as management is concerned is related party transactions. Now, as a business owner, and if you're running a company that eventually has to go and raise money, you have to make sure everything is above board. You cannot get into transactions with your relatives, with your friends. You cannot transfer money to them because it will show your company very poor light. So you have to make sure that these requirements, as far as related party restrictions are concerned, are taken care of. As far as the market itself is concerned, you have to see if the market is regulated. For example, there are a lot of companies who are entering the fintech space, but fintech is a highly regulated business. So you need to take that into consideration even before you give structure to your idea. You may also have a lot of large players operating in this market with a lot of capital and a lot of depth. So you may be up against a lot of competition. The last piece is financial metrics. So like I mentioned, you need to understand these financial statements and then track. Is your company positive cash? Meaning, are you burning money? Are you, by when do you expect to make profits? Or by when do you expect to be positive cash flow? You will have to start building some financial models, and these could be basic rudimentary models, but you need to understand at least what's going to happen in your business over the next 12 to 36 months. And finally, you also have to understand how financial disclosures work in your space. What is it that you need to track on a regular basis? Because that is information that your investor will look at, your regulator will look at. So with that, I'll open up the floor to any questions that you may have.
Yeah, Pavan, that Udyam question was not.
Yeah, Udyam basically is MSME. That's your Udyam. You can register yourself as an MSME or as a startup, right? So either way, MSME registration is also fairly simple. You just need to link your Aadhaar and it's a 5-minute process. So you can get that done. MSMEs again get benefits on the GEM portal. That is the government e-marketplace. So that will be of help. Again, if need be, I can put the link here.
If you have any questions, just drop your questions in the chat box. We'll take up. So, Pavan, we had few questions, no? From the participants while registering. We had few questions from them. So I'm dropping one question from that. So it's a very basic question from a student perspective. So I have multiple ideas. So what is the best way to select an idea and then go to the startup? When can they actually focus on registering a startup?
So the first thing that you need to look at is, we call it traction. Basically, are people willing to pay for your service? Are people willing to pay for your product? And unless you have created enough revenue, and again, enough is a relative term, but unless you have that initial traction where you are confident that people are willing to pay for the service or product and there is a need and it can scale, only then think of setting up a company. Which means you may have to do two things. One, you may either have to do a survey, and you'll have to go and talk to enough number of customers and understand what their needs are and how much they'll be willing to pay. You may also have to create a prototype of your product and maybe launch it in the market and see if there'll be people who'll be willing to pay for that service. And once you have the confidence that there is a customer base that's 2, willing to pay, and 3, that can be scaled, is when you should consider setting up a company.
So there's one more question now, Pavan. So are there any scammers? If yes, then in what way will they scam while registering?
Yeah, so there are plenty of scammers. So you definitely have to be aware of them. You have you have different kinds of scams. They call you up, they send you posts, they take away a lot of money. Like I said, the best place for you all to start as students would be to go and visit ICAI or ICSI. These are premier institutions of the country, and you have experts there who can help you set up these companies. You can also look at CA firms, CS firms in the localities that you work in case you don't have an ICAI branch close by. You can also look at CA and CS firms in the place you stay. Go and meet a professional and they'll be able to help you. You have certain websites that you can go and start applying to as well. But again, I don't have a lot of confidence as far as those websites are concerned because we don't know how many of them are genuine and if they're backed by professionals. So the best place for you to start would be a CA or a CS.
Okay. So what can be the advantages of registering startup in Karnataka?
So the recognition, so Startup India registration is central. It is not state-based. So that is on the startupindia.gov.in website. So there's no Karnataka specific benefit. It is a benefit that you get across India, wherever you're located. But Karnataka and many states like Karnataka have their own contests. For example, Karnataka has a very popular contest called Elevate every year. And in the case of Elevate, the government gives you a grant. The grant can be as much as 50 lakh rupees. It's a significant sum of money in case you are going to start your business. So recognized startups can participate in Elevate. Elevate also gives benefits or preference to startups that have women entrepreneurs. So that is something that you would need to take into consideration as well.
Okay. So how can there be difference between transitioning from partnership to private limited versus partnership to LLP?
Yeah, so Monisha, like I covered in the first slide, you can transition from LLP to company and partnership firm to LLP as well. It's more of procedural. It's a procedural matter, right? Like I said, you have to publish an advertisement in the paper. There's a form that you need to file. I think it's called UNC1. You have to file that with the MC. It takes about 2 to 4 months to convert these entities. So you can start with a lighter model. Again, I would not recommend partnership firms because of the unlimited liability. Better start with an LLP, and if need be in the future, convert it to a private limited company.
Okay. We have 2 questions in the chat box.
So the first one, do service startups need to register under shops and establishment? Yes. Any commercial activity needs to be registered under the shops and establishment law. The second question, from where can I know about the remaining 11 sessions of the series? I think Monisha is your best bet.
Yeah.
That's hold of her.
Yeah, we'll be sharing the details with you in the next coming sessions. Email is the best way, but we are trying to create a WhatsApp group of all the members who have joined today and who had registered for this webinar. Are there any other questions? Yes, sir. Gautam, sir. Are you willing to say anything? Yeah. Are there any other questions? You can unmute yourself and ask the questions. Okay. Gautam, sir. Yeah.
Gautam, Pavan, hi, Kari.
Hi, Pavan.
Yes, sir.
Hey, it's lovely to see you all. Hi.
Hi, Pavan.
So we all are the managing committee room, glued to your session, Pavan.
Nice. Good.
So if at all there is certain expectation from the participants as to what they want to know in specific, we can work on that and design our next session based on that. Instead of we thinking if there is something specific which they wish that this is what has to be addressed, it will be better for us also to know what specific content needs to be drawn up to. Is it, Pavan?
Oh, absolutely. Happy
Yeah,
to.
yes, sir, Gautam, sir. We have asked a question in the feedback form. So
Sure.
through that, we'll be actually setting up the future webinars on the basis of those topics.
When we have received a question then.
Yeah, we have received a question.
Okay.
From a friend.
If a startup operates from a residence, what benefits could be claimed, especially regarding electricity? No benefit at all. In fact, you'll end up paying more because businesses, if they're operating from a space, that space has to be a commercial space. You cannot do business from a residential unit. There are a lot of companies who started getting notices when they operate from residential places. And if you're doing commercial activities, you need to move from a residential meter to a commercial meter. So you'll end up paying more as far as your electricity bills are concerned. So please don't do that. Find a co-working location and register your office there. Also, to Gautam's point and the feedback, I do understand I may have this session may have been an overkill, may have given you a lot more information than what might have been expected. But again, I'm happy to fine tune the next sessions based on the feedback we get. Yeah, and even for a service startup, yes, service startups don't get any benefit, even if you register at your home.
One more thing, there's something called as a startup sphere in the city of Pavan that is happening on June 27th to 29th. That has been organized by the Institute of Chartered Accountants of India. A huge event that will be happening in promotion of startup community, where about 4,000, 5,000 people are expected to be joining for that event. I'll share the poster with Monisha. She can circulate it. Those who are interested can look into it, and if at all it suits and meets your requirement, you can register and join and learn more on this aspect as well as benefit yours, because there will be live funding and what we say, the pitch that happens there. So a lot is in store. So I'll just share whatever we have received. So Monisha can take it forward and share with the participants, so that whoever is interested, whoever has that right idea at this point, you will never know. It's just a matter of when the time comes, it can just happen. So one of the participants here can be the beneficiary of the startup sphere. Monisha, I'll share it with you. You can see if it meets and suits all of you, and you can share it forward thereafter.
Yeah, sure, sir, sure. So, are there any other questions? Yeah. Oh. I guess there are no more questions. So, yeah, let's give Mr. Pavan a round of applause for that insightful presentation. Thank you, Pavan.
Hey, thank you all. Thanks a lot, Gautam, for the opportunity. And
always, Pavan, it's a pleasure to have you join us, not just at the branch, and such initiatives also you have taken it quite sportively, and you have engaged yourself in this whole concept of our Mangalore branch. We are deeply thankful to you for sparing your time. More than that, contributing in this effort of supporting the startup ecosystem. On behalf of the branch, we extend our deepest gratitude to our dear friend, guide for all of us to hear, because he engages sessions for us too. So Pavan, thank you very much on behalf of all of us, and we request you to keep supporting us. The entire thought, what we have to have a series of sessions, you can guide us, you can take part basically, as well as guide us who best, whatever topic we receive from the participants, who best can be the resource person for that topic, who can throw more light on it. That also you can be, we need you as a part of this. Now that we have started it, now we are collectively a unit with Pavan, and we'll take this forward, so that the only motive here is being the knowledge partner in this whole process.
Certain, thank you so much.
Yeah, sure, sir.
And please convey my regards again to everybody in ICI.
Yeah, all are here, we have done it.
Thank you.
Yeah.
We'd also like to express our gratitude to all the partners who made this webinar series possible. A big thank you to the Institute of Chartered Accountants of India, Mangalore, for their collaboration and support. Their dedication to empowering businesses is truly commendable. Thank you, sir. Thank you, Gautam, sir. And additionally, we appreciate the involvement of Shine Foundation and Emirise Foundation. Their commitment to fostering innovation and entrepreneurship in India perfectly aligns with the goals of Startup CA Conclave series. We would also like to express our gratitude to Inunity, Innovation for Community, MCE, ASAN, and all the ecosystem partners who made this webinar series possible today. So last but not the least, I would like to thank all the guests and participants who joined today. Your presence is immensely appreciated, and this webinar wouldn't be possible without you all. Thank you all. And before we conclude, I would like to invite you to fill the feedback form. I'll be sharing the feedback form in the chat box. please do fill the feedback form. It will be very helpful for our upcoming 11 sessions. And this is just the first session of the Startup CA Conclave series. Stay tuned. As one of the participants has asked, we'll be sharing the details through emails and WhatsApp, and you can register for the further webinar series. So for any queries, we have also, I am dropping the phone number and email ID. You can contact us. So we hope you enjoyed the session. Until next time, happy, innovative, and best of luck for all entrepreneur journeys. So this is Monisha signing off for today. Thank you. Thank you, everyone.
Thank you.